Hello and welcome to my YouTube channel, The Accounting Educator. I'm Safir Ahmed, a senior lecturer in accounting and finance in a UK university. I also work with ACCA as an early career investor. In this video, I will show you how to tackle questions from control accounts, receivable ledger control account, payables ledger control account, and VAT control account. So this video is relevant if you're studying AAT Level 2, Principles of Bookkeeping Controls, or if you're studying financial accounting, preparing financial statements. Now, what you need to remember in relation to the receivable ledger control account and how should you tackle this kind of question. The first thing first, you need to identify what type of ledger account it is. Now, the receivable ledger is asset account. So once you established it, then you need to look at the double entry bookkeeping rules in relation to it. So check the double entry rule. And the double entry rule in relation to asset, as you know, asset increases debit and asset decreases credit. So in other words, anything which will increase this balance, in other words, that anything that which will increase the money your credit customers owe you will go on debit side as per double entry bookkeeping rules. So normally we have balance brought down, which is from the previous month. And of course, that this is still owed. So this is opening balance as well, we call it. So it's normally on the first day of the month. So let's suppose that if we are working in the month of June, so this will be 1st of June. And then anything which will increase this balance will go on debit side. Now, what will increase if this business pays, if this business sells more on credit, so which means that more credit sales, it will increase the balance your customer owe you. So the sales will go on this side. Can be any date. Let's suppose on 30th of June. And what else can increase it? So let's suppose that if your customer paid you, but actually you could not cash the check due to the insufficient balance. So in other words, the check has bounced back. So in that case, what we call it is return checks. So let's suppose that this is on 30th of June. Now, what will decrease it? It will go on credit side. Remember, it's asset account, and therefore any decrease in asset will go on credit side. Now, if your customer pays you money, then the balance they owe, the money they owe to the business will decrease. Please do not think about the money or the bank context here, because yes, bank will increase, but that's a separate ledger account, okay? So in this case here, let's suppose on 3rd of June, customers paid you. So it might be payment received, or you might simply call it bank here, depending on the drop-down menu they give you in a question. Similarly, if a customer has returned goods to the business, they're not going to pay that money anymore. So therefore, sales return will decrease this balance, and hence it will go on credit side. And if a business gives discount to customers, again, that money will reduce the balance that the customers owe you. So therefore, discount allowed will go on credit side. What else can decrease receivable ledger control? A receivable ledger or the money your credit customer owe you, irrecoverable debts. So for example, if a customer has gone bankrupt, obviously they're not going to pay you. So therefore, irrecoverable debts will go on credit side here as well. In addition to that, if your customer is also your supplier, in other words, that you owe them 100, they owe you 100, then it cancels it cancels both of the transactions in that sense. So what we call it, contra entry. So let's suppose 23rd of June. So once you have recorded all the debits and credit entries, and remember, you will be just simply balancing the ledger. So normally your higher side will be debit side, and then that amount will go on the other side as well. And remember, here you will have balance carried down. In other words, balance carried forward as well. They use that word as well. In other words, it's a closing balance. Okay, so somewhere here we will have total, same on the other side. Okay, so that's in relation to the receivable ledger control account. The same sort of approach we will be using for the payables ledger control account. So similar steps. So the first step is identify what type of account, or what type of ledger. Now, if you think about this payables ledger control account, this is the money the business owe to its suppliers. So therefore, that this is a liability account. Now, if it is a liability account, then we will simply check the double entry rules as well. And the double entry rule in relation to liability, as we know, if liability increases, is credit. And if it decreases, is debit. So based on that principle, we'll be looking into what will go on debit side and what will go on credit side. So balance brought down here, which will be at the beginning of the month only. So balance brought down will be on the credit side. Similarly, if a business buys more goods from suppliers, they owe more money to them, so which will increase the balance they owe to their suppliers. So therefore, any purchases, any credit purchases, remember that cash purchases does not go into payable ledger control account, but I'm just writing the word purchases, which it is implied that these are credit purchases. Okay. Similarly, return checks. So, for example, if the business paid to its suppliers, but actually that there were not enough money, and they could not actually take the money out of the bank account or transfer the money into their account by using a check. So in that case, again, this will increase the money payable to suppliers. So let's suppose this is 17th of June. Now, what will decrease this balance? So if a business can make payment to suppliers, now they owe them less money. The payment made or simply bank. So let's suppose the date for this was 22nd of June. What else will reduce? What else will decrease the liability or decrease the amount a business owe to its suppliers is, for example, purchase return. And let's suppose this was on 23rd of June. And similarly, discount received. So again, the business will not pay to its suppliers the discount which has been offered to them. And the business has taken it. Yeah. Similarly, contra entry. Remember, if you owe to your suppliers, but your supplier owes you something as well, so therefore it will be a contra entry and it will decrease the money the business owe to its suppliers. So now your balance carried down, which is normally at the end of the month, will be on debit side here. So you can see that we have used a similar approach in tackling this kind of question. At level 2, you need to know that what goes on debit side and what goes on credit side. At level 3, especially as part of your incomplete records, you need to know that a balancing figure can be asked. You can be asked to calculate. So, for example, discount received as a balancing figure, and they give you balance carried down, balance brought down, rest of the items as well, and you might have to calculate as a balancing figure. So that's at level 3 financial accounting, preparing financial statements. Okay, so that's that. Now the VAT control account, this one is a little tricky one because it's not very simple rule. There are few rules that you've got to remember. So VAT control account, you deal with several different transactions. So first, for example, we're gonna deal with VAT on sales. And to be more precise, we can fairly say that VAT on credit sales. And remember, a business might be selling on credit as well as on cash. So VAT on credit sales, just think about this, that VAT on sales and VAT on credit sales, in other words, what type of account it is. So again, you select that first and then you say that what type of account it is. Now this is, as you know, is a liability account. So although business received it from its customers, but they have to pay to HMRC. So it's the liability of the business to pay to HMRC. So therefore, and as you know, the rule in relation to liability, liability increases credit, decreases debit. So in relation to the VAT on sales, so something you will be taking it, or in other words, that VAT, you will be taking it from sales day book, which is in relation to the credit sales. This will go on credit side here, sales day book. Now, in relation to the credit sales, there could also be sales return. So VAT on sales return decreases the liability. Remember that this VAT, if we haven't received it, we are not going to pay to HMRC. So decrease in liability goes on debit side. Sales return debit. Similarly, in relation to VAT on sales, you will have discount allowed. So any discount allowed, any VAT on discount allowed will decrease the liability that we don't have to pay this VAT to HMRC. So similarly, discount allowed daybook, so VAT from discount allowed daybook will go on debit side. So we dealt with the VAT on credit sales. Now VAT on cash sales. Which you remember that you must have recorded in the cash book. Again, this is a liability as well. So therefore, I can write here cash sales, or I can write here cash book, debit side. depending on what is being given to you in drop-down menu, basically. But it will be either of them. Okay, now the second thing, which is VAT on purchases. And as we know that this is asset for the business because it can be reclaimed from HMRC. I remember the double entry rule in relation to assets. So we know asset increases debit, decreases credit. So as you know that VAT in relation to, so VAT on credit purchases. This will be asset for the business. So of course, this will be taking it from the purchase day book, and it will be on debit side increase in asset. Now, what about VAT in relation to purchase return? So purchase return, that's decrease in asset because if we haven't paid it, we are not going to claim it or we won't be able to claim it. Similarly, VAT on discount received, as we have not paid to suppliers, we won't be able to claim it back. So this will be discount received daybook. Now, in relation to VAT on cash sales, this will be, of course, asset as well. So here, cash purchases, or in other words, this will be, again, cash book, but this will be credit side of the cash book or the payment side of the cash book. And this will be debit side of the cash book or receipt side of the cash book, in other words. So we dealt with the major ones. Now, any VAT on expenses. So VAT on expenses are also capital expenditure. So things like non-current assets. This again is asset for the business as they will be able to reclaim it back. So therefore, this will go on the debit side. So it will be expenses, or it could be capital expenditure, non-current asset, any non-current asset. So that will go on debit side. Now, a couple of more things. One is in relation to VAT payment to HMRC. So if a business pays to HMRC, so this is, we can call it as fourth, and this was third. Okay. So any payment to HMRC, this will go on debit side. Why? So we can fairly say payment to HMRC or refund from HMRC. Now, if it is payment to HMRC, then it will decrease a business liability. So therefore, it will go on debit side here. It will be bank. And any refund from HMRC, it will go on credit side here. Now, remember that refund, HMRC refund is basically decrease in asset, because remember that it was reclaimable and now it's not reclaimable anymore as far as the VAT control account is concerned. Yeah. And there could be like one thing actually is forgot to mention that the balance brought down can be on any side in the beginning. So it could be on debit side, it could be on credit side, depending on what they give you. So if the business owed to HMRC at the beginning of the month, then it will go on the credit side. If the HMRC owes to business, in other words, refund, then it will be debit side. Similarly, your balance carried down can be on either side. So if your balance carried down is on debit side, which means your credit side is bigger than debit side, which means that the business owe to HMRC. And vice versa. If your balance carry down is on the credit side, which means that your debits are equal more than the credit side, which means that the business um, the business will be able to reclaim this money. In other words, that the HMRC owe them this money. Okay. They normally ask you that what is the VAT account balance, whether it is debit balance or credit balance. They don't mean that the debit or credit balance of the VAT control account. Generally, they ask you that. So if they don't specifically say VAT control account, do not think that what side it is. Because if you think about if it is on debit side, which means that it's VAT liability. Yeah. If it is on credit side, which means the VAT refundable. So please be mindful about that. Okay, so I hope that this was helpful. I will be back with other videos. You can also give me a suggestion of any topics via comment if you need me to make any video on any specific topic. Thank you for listening. Bye for now.